So everyone is afraid of the top. So let's just take a second and go see what a top looks like. And this is just something I've been noticing a lot when it comes to the bubble talk. Everyone talking about how we're in an AI bubble. I think Bezos made something that got everyone all up in arms. But let's go take a look at it. Let's see what tops have looked like in history to kind of prepare ourselves for if and when a top occurs. Because right now, right, people over at StatsEdge Trading, myself included, are making a whole bunch of money. And we all know that this will come to an end at some point. We have no idea when. Anyone who tells you that they do, just run. But there might be some signs, there might be some things that we can look out for to say, right? Might be getting near a top, might be time to take a little bit of chips off the table. I don't know, but let's take a look. So what I've done here is I have gathered all of the major tops. I went Perplexity. I know them off by heart anyway, but I went to Perplexity and I said, give me the dates of every top that preceded a 20+% decline since 1990. Reason I usually only go back to 1990 is I don't really care too much what happened in the 70s and the 60s and all that. That was a different time, different standards of what we were on for currencies, and like all kinds of, it's just way too different, right? Give me the internet on, is kind of what I ask for. And let's go through them. So this is the year 2000. So this is a 51% decline in the S&P 500. It was 60 something, I believe, in the NASDAQ. Huge down move. Now, what happened right before it? A lot of people, we look back at this and we say, oh, well, there was a bubble. There was a dot-com bubble. The problem with calling it a bubble and describing it that way is it gives this kind of idea in people's mind that there's a pop, right? A bubble grows and grows and grows and then pops and then completely tanks all the way to zero. You can see not what happened, right? So the purple box that I'm shading is always going to be to show that there was a range built around the top. And in this case, you can see this kind of 135-ish level on the S&P 500. We bounced at it a couple times. We broke down under it. We even came back to test it to give everyone a second chance. And then we started to fall. And then we made our way back down. This one here is 2008. Same type of thing. For about a year plus, we based sideways around the same price. Because if you just zoom out and look at it, right, the dot-com bubble, we came all the way up to the great financial collapse and then we fell again. That's what got everyone all up in arms and worried. And we chopped around for a bit. We sold off. We came back to test it. And then we started our down. It really doesn't get ugly until, way back here. Great. Cool. So that's two. It's two of the biggest ones out there. And none of them were hit a top, explode, and then just immediately start dropping. They were all build a base, have that base break, have that base move lower, and then go from there. Next, here is COVID. Even COVID. So COVID is the fastest bear market on record, from all-time highs to 20% drawdown, faster than anything else. Still, you had a little bit of support here. You broke it pretty sizably. And then you had a little bit of a bounce. So when you break this low right here, that's probably time you go, okay, I'm going to take some chips off the table. You miss all of this collapse, and then you know what happened after COVID, straight back up into 2021 and onwards. But not a one and done all the way down, right? Some amount of, okay, there's a little uncertainty. We're breaking support. We're breaking some major moving averages. Might be time to lay off a little bit and then a move down. This is 2022. So the end of 2021 into 2022, Russia, Ukraine, Fed raising rates, all that kind of stuff. You can see a nice bit of resistance here. We break down, we come back to test it 1, 2, 3 times and fail. So even if this was your area to get out, you missed most of the decline and then back up you come. So again, not a event. And then this was the last one with Tariff tantrum, I think we're calling it, what happened last. Again, nice sideways consolidation, a breakdown, a retest before things really got ugly here after Liberation Day. So all of this to basically show that this is the exercise you should be doing if you're worried about a bubble that's going to pop and take away all your money. It's not to say the market doesn't go down. Some of these downs were 50 to 60 to plus more %, which means that speculative companies went down 70, 80, 90%. Some have yet to recover. It's to show that it wasn't a point in time. There wasn't a time in which you woke up, which I think is what people think, is they wake up one day and they look at their account and it's down 50%. And they go, what happened yesterday? It's to show that these are events, or these are processes, right? And the common Wall Street saying is that bottoms are an event and tops are a process. Generally speaking, at the top, the news will look fantastic. Everything will look great. And then the market will start to break support, and it will start to break major moving averages, anchored VWAPs, whatever you want to use. But there's generally signs of when to kind of lighten up. And at the other thing to note is that for all of those times, say you didn't sell at the top, say you only got out of a lot of your positions halfway down. That's okay. You have a whole bunch of money and you're just waiting now. And in all cases, we made new all-time highs. So it just goes to show that if you have everything timed out correctly, and you're able to take at least some off the table when the market is showing signs of weakness, then you have that kind of dry powder for when the market really starts to take off again, and then you can attack. And if you are struggling with that and you don't really have a plan at all, then come on over to StatsEdge Trading, which you see above my head. We are systematic traders. For everything we do, there is a plan. There is a 25 plus year back test for every decision we ever make. We're looking at a stock and we're not just saying, I'm going to buy this because the squiggly lines look great. We are buying it because based off 25 years of data, we expect this to be right this often, this percentage of the time, and we're roughly going to make X and we're going to lose Y. It won't work all the time. We're not perfect. We're not gods, but at least we have a plan so that when the bear market comes and things get rough, I'm not going to say we're just going to start printing money, but we have a plan and we have something to compare ourselves to. So we can say, are we sticking with our plan? Yes. Even though we're in drawdown, let's keep our head down. Let's keep sticking to the plan, because eventually we are managing risk correctly, and eventually we'll come back and everything will be all right. So that's what tops look like. Don't freak out too much about them. Just get ready, prepare yourself, understand what you're going to sell, what price you're going to sell it at. And if you don't have all that, come on over to StatsEdge Trading and I'll talk to you guys soon.